Thanks for clicking. The Bank of Canada has held on interest rates, keeping its policy rate at 2.75%, despite ongoing calls for a reduction in the cost of borrowing. The bank cited ongoing inflationary pressures as one of the major reasons for the hold, noting that one of the biggest uncertainties is how fast businesses are going to be passing on these price increases to Canadians.
The Lord tells me he can get me out of this mess, but he's pretty sure you're
And Bank of Canada Governor Tiff Macklem and Senior Deputy Governor Carolyn Rogers held a press conference shortly after the announcement. Look at them laughing as the conference starts. They know exactly the level of ridiculousness that's about to occur.
You said in your statement that you could be persuaded to lower rates going forward if inflation remains contained. What does contained mean? Is that contained at current levels, or
for you, and one for you, and one for you?
But we did end up, finally, getting some reasonable questions, including the extent to which the bank thinks tariffs are currently pushing up prices, and how the bank is going to approach ongoing uncertainty. So what I want to do today is go over the bank's announcement, take a look at the press conference held thereafter, and then go over some implications of current uncertainties. As we'll see today, the competition for the 2025 Award for Excellence in Canadian Journalism, where we count how many times each press outlet uses their finite time with the governor to ask about rate cuts, is heating up with 4 questions this conference, with the Globe and Mail and the Wall Street Journal pulling ahead.
We're gonna win.
We'll obviously continue to have updates out on these press conferences and who wins at the end of the year. Make sure you click like and subscribe if you want to get those updates, but for now, let's get into this announcement. On to the announcement. As mentioned, the Bank of Canada announced this morning that it would be holding its policy rate at 2.75%. In going over the announcement, Governor Macklem stressed that the bank is focused on what's going to be hitting the hardest, what the tariffs are going to hit the hardest, the economy or the inflation rate.
Council will continue to assess the timing and strength of both the downward pressure on inflation from a weaker economy and the upward pressure from higher costs.
Which, yeah, on the one hand, unemployment is ticking up, insolvencies are on the rise, the bank itself is noting an increase in delinquencies, and the OECD says it's only going to get worse from here. But on the other hand, inflation does appear to be ticking up. And these uncertainties eventually became readily apparent in the governor's press conference. But before that, given all of the news that we heard last month with a widely cited report coming from Oxford Economics, saying that the counter tariffs were basically down to zero, a point so important that the government took the time to rebut on social media, clearly the first question out of the gate from the Wall Street Journal should be one that the governor is never ever going to answer.
Does inflation need to slow in both May and June before senior bank officials would consider a rate cut on July 30th?
And yeah, look at them laughing. They know it's a dumb question, but look to whom the bank grants interviews. They do the exact same thing with the Globe and Mail. They act annoyed when the Globe, usually Mark Rindell, not this time though, asks about rate cuts, but again, look who the central bank gives interviews to when they want to talk to the public.
Hey, I scratch your back, you scratch mine.
And speaking of the Globe and Mail,
doesn't that uncertainty alone tilt things in favor of a rate cut?
Regardless, of course, the governor didn't answer the question. He didn't answer the question from the Wall Street Journal, The Logic, Yahoo Finance, or the Globe and Mail, as the governor is never ever going to give us a concrete answer as to when and by how much the bank is going to cut interest rates. If he did, then the market, Canadians in general, would start trying to front run that rate cut, acting as though, spending as though we got that future rate cut, creating the same effects as the rate cut would have created in the first place. And if the bank wanted that to happen, they would have cut rates.
Whoa!
But we did get a few well thought out questions, with the first one coming from the Financial Post.
How much of a role did trade disruption play in the rise of core inflation in April? Can you unpack what you're seeing in the data? Because in your earlier remarks, you said that it's kind of having some impact.
And yeah, that's the closest we got to any mention of that Oxford Economics report. And we actually did get a little bit of good information from the governor.
In the published CPI data, the effects of retaliatory tariffs. It's still too soon to see those. So those are the ones that you can track more directly. Disaggregated sort of micro CPI data. So, however, that doesn't mean that the trade disruption isn't having any impact on prices, because certainly what we hear from businesses is they're looking for new suppliers to try to avoid tariffs. They're looking for new markets to sell their goods overseas, not in the United States, where they're subject to tariffs. Those things have costs.
So yeah, what the governor is saying is that tariff level inflation isn't showing up in the CPI just as of yet, which is concerning as the CPI is showing an increase in prices.
We're doing more outreach than we normally do. We're talking to businesses, so we're trying to, the data tells us one thing, but talking to Canadian businesses gives us the kind of information the governor's talking about, looking for new suppliers, carrying more inventory, and every time an announcement's made, businesses are left to kind of figure out what it means. All of that has costs. You're also seeing it in what businesses are telling us they anticipate is going to happen to their costs and to their prices and stuff. So we're putting a lot of weight right now on what we call soft data or intel we're getting from businesses.
There are things being negotiated now that are going to solve all your problems and answer all your questions. That's all I can tell you now.
So it looks like it's not just the CPI data that the bank is focusing on. They're doing their usual interviews with businesses, their surveys, etc., that they usually do, which I guess just makes it more and more difficult for you and I to predict the bank's moves based off the inflationary data.
And so here's what is going to happen.
But as we saw in the press conference, it's not just uncertainty for you and I.
As you attempt to try and provide this certainty to Canadians, how difficult is this for the two of you to sit there and try and balance all of this as things come from the United States that you can't predict and nobody else can predict? How?
And for his part this time, the governor actually hit the nail, I think, on the head.
Well, look, okay, it's difficult for us, but what I'm more worried about is it's difficult for businesses that are faced with new rules of the game every week. I'm much worried about households who are worrying about the possibility that they'll lose their job.
And yeah, it's extremely difficult right now. Absolutely zero people on Earth, besides maybe one, knows what's going to happen. We just had new steel tariffs this week out of nowhere, but they could be gone by this point in time next week. It all depends on what the 43-dimensional Grand Chess Master himself decides to do. And those uncertainties, the uncertainties based off what one single person does, obviously leads to problems with forecasting.
It sounds like we'll be living under uncertainty for a while. So what will it take for the Bank of Canada to provide an official forecast for the economy again? And given that we've already received some insight into this, there are some patterns, some news, do you expect it to be ready to deliver one in July at the monetary policy report release?
And yeah, for their part, the frustration on the part of the Bank of Canada was obviously on display throughout the conference.
A lot depends on the news we get. We just had a question about the sort of pace and volatility of trade policy announcements. We've talked about really the two types of uncertainty we're dealing with. There is the policy level of uncertainty, just what announcements are made and how long they actually remain in place. They have to be there long enough that we can actually digest them and produce a scenario with them. But even once we have that level of certainty, there is the next layer, which is how do those policy announcements feed through the economy and affect things like growth and inflation and employment and all those things. So you sort of need to get to a certain level of resolution on the first layer of uncertainty to get to the next one. And that's really what a forecast does, is it gets to that second layer of variables. So it is our hope and our expectation that by July we'll be back there, but we'll need to wait and see.
Okay, John McFarland from Yahoo Finance, before we wrap it up with Rob McClister. Go ahead, John.
And yeah, I think right now the central bank, just like you and I, just like the rest of us, are in a real period of uncertainty. We don't know, no one really knows where all of this is going. And I think that bared itself out in today's announcement. So, in summary, for the most part, the media falling down, as usual. The Bank of Canada holding on interest rates, stressing that it doesn't really know which is going to hit hardest, the tariffs on the economy or the tariffs on prices, remaining in its continual holding pattern. The bank has let us know that it's not necessarily going to be focusing on just the CPI data, but is a bit more forward-looking, looking at what businesses plan on doing in the next 3, 6, 12 months ahead, and still decided to hold rates anyway, which tells me that prices are probably heading up and interest rates are probably going to stay relatively close to where they are. Maybe a few more cuts as the economy continues to slow, which obviously it is in short order. But for right now, the bank is noting that everything is extremely uncertain. We will obviously continue to track any changes to that uncertainty on this channel. Make sure you click, like, and subscribe if you want to get those updates. But for now, thanks so much for watching.